Hey, and welcome to Tax Talk with the Tax Queen. My name is Heather Ryan. I am also known as the Tax Queen. I am an enrolled agent, and that means I'm licensed to practice taxes in all 50 states. Thanks for joining me today. Today's topic is the top 5 tax questions for RV entrepreneurs. I have compiled probably the most popular questions that I get from my clients and from others. I just see asked in groups, Facebook groups, or if I'm in person and I happen to be around other RVers. These are just common questions and sometimes also misconceptions. So I'd like to clear things up and make it easier for you to understand. So question number 1 is, can I deduct 100% or all of my travel expenses? So this is kind of a varied answer, right? There's no necessarily one bucket fits all for everyone here. And why do I say that? It's because travel expenses can mean different things to different people. So let's clarify and break it down. So travel expenses to leave your home behind, and your home here is your RV, and that can also include your family if you have one or a spouse. So if you are leaving your home behind and you're getting on an airplane, you're possibly staying in a hotel, maybe you have a rental car, or you have Uber or taxi expenses. Those expenses, 100% deductible, as long as they're for business, obviously. If you're going to meet with a client, if you're going to a conference, perfectly fine to deduct them. Now, on the opposite side of the spectrum, if you decide, okay, there's this conference in Fort Lauderdale and it's in February, and I'm going to make sure that my RV routes through Fort Lauderdale to attend that conference at that time. The mileage and expenses you incur to get there, bringing your home with you, remember, your RV is your home, is not deductible. If you parked at a campground and you're then taking your tote or your truck that pulls your trailer to meet with a client, to do a business errand, to do something related to business, that mileage would be deductible. Otherwise, the mileage to drive your home to a new location because there happens to be a conference there is not a tax deduction. And the reason is because you're using it for personal use, right? You're watching Netflix, you're cooking your meals, you're hanging out with your spouse or your kids, or heck, you're just reading a book. Like you're using that space for personal space. And there's just no place that allows, a home, right? Or personal use of a vehicle, which is what we're talking about here, to be a business deduction. So I want you to be really clear on that. The way that you get around this or make sure that you're clear, the IRS likes to see written records. So I always say, if you want to deduct mileage that you think that you're using, the RV or a tote or truck, whatever it happens to be, whatever that vehicle happens to be, keep a mileage log, okay? So show your business purpose, write your mileage down, write the date. They like to see, who you're going to visit. There's apps out there that will help you do this. So go get an app if that's the easiest way. I mean, if you have QuickBooks, there's actually a mileage function within QuickBooks. It's on your phone. It can record, your drives. It goes from starting location to ending location. You can add notes. I mean, there are so many easy ways to do this now. You can have a written notebook if you really want, if that helps you to just have it on the passenger seat or something, and that's the easiest way, then by all means do it. Whatever way works for you, I want to make sure that you do record mileage. So business mileage is definitely allowed to visit a client, to run business errands. And for those who are YouTube or content creators, if you're parked at a campground and you're, let's say, outside Yellowstone National Park, you're 30 miles from the park, and you take a 100-mile drive that day, and you have a video about it, you talk about it, you share it on your Instagram or wherever avenues, however you share content, for sure, that can be business mileage. But again, state your purpose, right? And again, it's only from the campground or wherever you started. So if you're a boondocker, that location to whatever you did that day for mileage, as long as you're using it in your content, back to that location. It's not from your previous location. Let's say you were in Denver and you got all the way up to Yellowstone, you can't count that as business mileage. So I hope that kind of clarifies this a little bit. Just remember that the RV is your home and the home is never allowed to be used as a tax deduction on a business. So just be aware of that. So let's go into the next question, because this kind of leads me into that. When your home is allowed to be home office deduction, right? So a lot of people ask, can I take the home office deduction? I work for my RV all the time, 40 hours, 60 hours, whatever. I sit at the table in the RV and I'm doing my work. So can you take that home office deduction? So let's step back and define what the home office deduction is. The home office deduction is for 100%, right? You heard that? 100% business use. And it should not overlap with other use. So living in a tiny space, is there really space to have 100% dedicated to business? I rarely see it. A few exceptions can be a toy hauler where you use the garage strictly for business. It should have no other items stored in there. It should really only be business. It can have a desk. If you're like an artist or something, a creator, that can be, the storage for those items. That's fine. Even if you have things that you sell, if you're a seller of products and the products are stored in the garage and your desk is there, okay, maybe that sounds right. But I also want you to think that the home office deduction is actually, well, number one, it's a red flag, a big red flag. And number two, it's so small. Like, if you have a 10 by 10 space, you're talking about 100 square feet, okay? So at $5 a square foot, we're talking about the simplified method, $5 a square foot. So you get $500 off of your income. So, if you're in the 10% tax bracket, just do the math, right? So you're not saving a ton of taxes, and it is a huge red flag. And I want to maybe just also step back that mileage is also a red flag. So if you have really high mileage and you're taking the home office deduction, you now have 2 red flags on that return. So just be really aware of this. The risk is yours to take. Obviously, I'm just trying to give you the best advice and from what I've seen from hundreds of returns that I've helped people with. The next question that I get often, it's kind of multi-part. And so what should my business structure be? And where should I register? Should I be an LLC? Those are kind of all encompassing or all similar questions in my book. And I actually have a whole separate video on business structure. So we call it LLC versus the S Corp, because I find business structure completely misunderstood by many people, or they don't really get why they're registering a certain way or why they're opening this business with this specific name or anything like that. So if you really want to dive a little deeper, that's a great video for you to watch, but we'll just kind of briefly cover the options. So sole proprietor, you file a Schedule C on your 1040. This is the simplest method. There's no registration necessarily. You use your social security number, so there's no EIN or employee identification number needed. Really easy and really simple. The next one is the single member LLC. LLC stands for Limited Liability Company. And I do recommend this for many people, if not almost all of my small business owners. It's a great way to start to really separate you from your business. So you would, that whole liability thing is separating personal and business assets so that if somebody sues the business, they can't touch personal, okay? I'm not a lawyer again, but this is basics of that. So the minute you have multi-member LLC, so remember, single member LLC, same as sole proprietor, you file it on a Schedule C. You now have a multi-member LLC, so that is a partnership by default. And again, I can't really answer which business structure might be best for you. They all have maybe advantages and disadvantages. And then there's the S Corp. And so S Corp is a tax election. So it's not actually like a entity structure for tax purposes it is, but a lot of states you would still be an LLC and you would elect to be taxed as an S Corp. So I hope that kind of clears it up. I have that separate video. I really encourage you to watch it if that is something that you're struggling with. The other misnomer around this is that I want to be an LLC because it offers tax savings. You know, my friend, somebody told me, whatever it is, they advised me to be an LLC to tax savings. And I have said this so many times in all of my talks and sharing and in writing my articles and my blogs, but the LLC itself does not offer any tax savings. So sole proprietor is the same treatment for taxes as a single member LLC. You're always responsible for those self-employment taxes, and I think that's what gets a lot of new business owners is that they're not familiar with that. They're not necessarily aware or on top of things. So the other part of this question is where should you register? And I usually say register in the same state as your domicile. And because this just keeps things simple, it keeps it all in the same place. If you register elsewhere, then you may actually have to register as a foreign entity in your domicile state, and it just gets more complicated. You're now dealing with like 2 registrations and 2 renewals every year, and just keeping up with all the paperwork is overwhelming. If you really have questions around this, I do urge that you either talk to a lawyer or talk to a tax professional who can guide you specifically for your situation. These are just really general guidance. So question number 4. Do I owe or have to file a state tax return? Okay, I'm traveling to all these states. Is my income earned in all of these states? So the short answer is really, it depends. I know. How are you working? Where are you working? Are you going into an office? Are you just working from your RV and you have an online business, right? There are differences. So let's just go into some examples because I think that's the easiest way to kind of share the answer to this question, and I think you'll have a little more clarity around it. So some examples include work camping. So work camping, you're most likely staying in a campground. Heck, there's Amazon is work camping, right? Camper Force. You're working in a state. You're working in a warehouse or a building. You're going into that physical office or space and doing the work. And so therefore that money or income is earned in that state. So that makes a lot of sense, right? It makes sense, right? You're physically going into an office, you're at a campground, anything like that. The other example I use is a traveling nurse. So that traveling nurse is most likely going into a hospital or clinic of some sort and helping patients in that state. So again, state-earned income, you usually have to file a state tax return. This is especially true if you're a W-2 employee because they're most likely withholding state income tax. And a lot of the time, if not most, I actually see a slight refund from a place when you're not a resident, but you still owe state income tax or state taxes to that state. The other option or scenario I see is a traveling contractor, and by contractor I mean an electrician or a plumber or someone who is doing physical labor and going again onto a job site and working on that job site. So that income is earned in that state wherever the work is being done, and you most likely will have to file a state tax return. If you own your own business, which many of you might be here as RV entrepreneurs or small business owners, then it gets sticky. And most of the time I say that your business income is earned wherever you're registered or wherever your domicile is if you're just a sole proprietor. So I try to take the physical work and equation out of it. Unless you're spending, 4 or 5 or 6 months somewhere and really kind of planting roots a little bit more, I really say disregard the state income tax and reporting it to all the states that you travel to. It gets way too complicated. You're opening way too many doors and cans of worms, I like to say, because no one likes worms, right? Or at least cans full of them. I just try to say keep it simple. If you do spend more than 3 months, if you're earning like more than $10,000 or something, and you happen to be in that state for that amount of time. And keep in mind, being in that state for 3 months could be 2 weeks here, 2 weeks there, a month here. So it's the whole calendar year. It's not necessarily consecutive. But again, I try to not stress on this. And if you're not physically going into an office or physically, working in a client's office, if you're doing contractor work, freelance work, I say don't worry about it. So hopefully that clears it up a little bit. Again, if you have questions, please reach out either to me or another tax professional who can help you with your specific situation, because these are not one size fits all. Number 5 is, should my business own my RV? And I kind of want to go back to that whole travel expenses and mileage and home office deduction. So it's not about who owns the RV. It's about the use of the RV. So even if the business owns it and you're using it 25% for business, the other 75% is personal. So it doesn't really help you at all. It actually might complicate matters, and that you now need commercial insurance. Sometimes, they will deny a claim. Insurance company will deny a claim if you have an accident, if it's not insured properly. And trust me, they will find the loophole if they can. And I don't really see a benefit. Usually, if you have an LLC, which many business owners are, you can probably register with the LLC name, but you can't insure it unless you have commercial insurance. And it adds a challenge that I don't see necessary. And if you have mileage and you want to reimburse yourself, that's fine. If you're a sole proprietor and that Schedule C, the mileage is perfectly allowed. If it's business mileage, we already covered that. But in general, I want to say no, your business should not own your RV. I hope that cleared some things up for you. Maybe you have more work ahead of you to do some research. Go ahead and watch one of my other videos that are available. Dive deeper into each topic. Thanks for joining.